Many small and medium-sized companies approach the Hong Kong Trade Development Council on how to tackle the Chinese mainland market. And invariably, they'll be talking to Terence, who's the China business advisor for the HKTDC. Terence, hello there. And looking at the sort of ways you can approach the Chinese market, if you're a foreign company, there's the WOFE, the wholly owned foreign enterprise, there's a joint venture possibly, or become a representative office of some kind. Which is the route that you would advise particularly?
First of all, you need to make sure whether you want to source or to sell in China. But for example, if you want to just source from China, I would advise you guys to start with a representative office first. But if you want to sell to China, it depends on what types of business model you are going to adopt. For example, if you're just selling to our agent or distributors in China, that may not be a good idea to set up a company there. But if you want to set up your own retailing outlets there, of course, we may have some choice like WOFE, like equity joint ventures.
So of course, if you have a representative office, it means that you can't actually do business on the mainland. So that's a disadvantage.
Yes, well, especially for those companies, that if they want to source from China, because today, many Chinese companies and factories, they can do exporting business by their own. And on the other hand, you will know that China still is a big emerging market. If you have legal presence there, that means you also have legal liability. If you don't familiar with there, and then you set up a company there, and actually the risk is a little bit higher. And on the other hand, remember that if you set up a company in China, today, China's company capital requirement, pay up capital. That means you need to inject certain amount of money into China. But that's only for you to pay up capital for a rep office.
But would you say there's more a sense of security if you adopt a joint venture with a local company?
If you want to set up a joint venture, for example, equity joint venture, for example, Martin, you got 51%, I got 49%. If the pay-up capital is 1 million, that means you need to inject $500,000 into that company. Of course, my shares will be less. But you need to think, well, because there's a cultural difference between the China companies and yours. Can you handle this?
So one obvious perception would be is that if you have a joint venture, then that's going to be always in favor of the local company.
Not exactly, because today, after China joining the WTO in 2001, one principle of WTO that has natural treatment. Under this principle, China has already amended their laws. For example, in the old days, for setting up trading company or retailing companies in China, it must be joint venture. And the Chinese side should be the majority shareholders. But today, after China joining the WTO, they amend this. There's no, for trading and retailing company, for foreign investors, they can be the majority shareholders. They can be 100% owned. We call WOFE. If you want to do in retailing business, then of course you need to set up your retailing companies there.
So I understand that many foreign companies now actually make goods on the Chinese mainland for the Chinese consumer market. So is that something you'd actually advise?
Well, it depends on what types of goods you are going to sell. For example, if you're going to sell international brand name, if you make it in China at the very early beginning, they may think that still it is not an international brand. Some low-end goods, some household goods, comparative advantages is your formula and the price. If you want to compete with Chinese company in price, then you need to make in China.
Well, we talk about the Chinese mainland, but what if you were to approach the Chinese mainland from Hong Kong? What advantages would you get then?
Well, Hong Kong, I think, is one of the most international cities in China. And when foreigners, they didn't quite understand the China market, the business environments in China. If you have a presence in Hong Kong, it is easier for the foreigners to come here to understand what is going on in China. Hong Kong can provide a learning platform for foreign investors. There's thousands and thousands of Chinese companies here. Well, sometimes, of course, we can do business with China inside China, but on the other hand, we can do business with China in Hong Kong because of there's over 2,000 Chinese companies in Hong Kong.